Don't know how to invest, and you want to build wealth? I present to you the simplest and least risky investment that exists. All you need are simple principles that will lead to a peaceful life and financial stability in the long term. At the same time, it is a suitable way of investing for both novice and conservative investors. This method is very simple, can be automated, and you need almost no knowledge of investing, and you don't even have to look at charts. Compound interest. Compound interest is the principle that allows the interest you earn on your investments or deposits to compound itself. This means that interest is added to the original capital, and in subsequent periods, interest is earned on both the original amount and the interest that has already been credited. It is also called the compounding snowball, and is called the eighth wonder of the world by the investors on Wall Street. Here is a simple example of how it works. Original capital. Imagine you invest $1,000. Interest rate. Let's say the interest rate is 10% per year. First year. After the first year, you earn 10% of $1,000, which is $100. So at the end of the first year, you have $1,050. Second year. In the second year, interest is calculated on the new balance, which is $1,100. 10% of $1,100 is $110. At the end of the second year, you have $1,210. Subsequent years. This process continues, and each year, the interest increases because it is calculated on a larger amount. And if you want to calculate how much you can earn, there's a link to a compound interest calculator in the description below. So compound interest means that the longer you invest your money, the more interest you earn, which can lead to a significant increase in your capital over time. It is a powerful tool for building wealth. DCA method. DCA, or dollar cost averaging, is an investment strategy that involves regularly investing a fixed amount of money in an asset, such as stocks or mutual funds, regardless of the current price of the asset. This method has several advantages and can be an effective way to reduce the risk associated with investing. How DCA works. Regular investments. Instead of investing a large amount at once, you divide your investments into smaller amounts that you invest at regular intervals, such as monthly or quarterly. Risk reduction. By investing regularly, you buy more units of an asset when prices are low and fewer when prices are high. This can help smooth out the average price you buy at and reduce the risk of investing a large amount at the wrong time. Psychological benefits. DCA can also help investors overcome psychological barriers, such as fear of a market downturn. Regular investing can lead to more discipline and less emotional decisions. With these two principles of compound interest and DCA, you are able to build financial independence, so it is only a matter of time. Now you just have to choose where to invest that money for the best possible return without too much risk. Types of long-term growth investments. Here, I will show you 5 long-term growth investments that I would recommend. S&P 500. The S&P 500, which stands for Standard & Poor's 500, is a stock index that tracks the 500 largest publicly traded companies in the United States. The index is widely considered one of the best indicators of the performance of the U.S. stock market and the economy as a whole. History and long-term performance. The S&P 500 was founded in 1957 and has since become a key benchmark for investors. Historically, the S&P 500 has averaged an annual return around 10 to 11% over the long term, which includes both capital gains and dividends. It is important to note that returns can vary significantly from year to year depending on economic conditions, crises, and other factors. Largest companies in the S&P 500. The largest companies in the S&P 500 by market capitalization include Apple Incorporated, AAPL, a technology giant known for its innovative products such as the iPhone, iPad, and Mac. Microsoft Corporation, MSFT, another technology company that specializes in software, hardware, and cloud services. Amazon.com Incorporated, AMZN, a leading e-commerce and cloud computing company. Alphabet Incorporated, GOOGL, parent company of Google, a dominant player in online advertising and search. Berkshire Hathaway Incorporated, BRKB, an investment conglomerate led by Warren Buffett that owns holdings in a variety of industries. Index weightings. The S&P 500 is a weighted index, meaning that each company in the index is weighted based on its market capitalization. This means that larger companies have a greater impact on the overall performance of the index. For example, if Apple or Microsoft experience a significant increase in their stock price, their impact on the overall performance of the S&P 500 will be much greater than that of smaller companies in the index. This weighting system ensures that the index better reflects the actual performance of the market, but it also means that investments in the S&P 500 can be more affected by the performance of a few large companies. This is why it is important to track not only the overall performance of the index, but also the individual companies that make up the index. Dow Jones Industrial Average. The Dow Jones Industrial Average, DJIA, is one of the oldest and most well-known stock indexes in the world. It was founded in 1896 by Charles Dow and originally included only 12 industrial companies. Today, it consists of 30 large, publicly traded companies in the United States, which are considered a representative sample of the American economy. History of the Dow Jones. 1896. Creation of the index, which included 12 companies, such as General Electric and American Tobacco. 1928. Expansion of the index to 30 companies, which is its current form. 1985. The Dow Jones breaks the 1,000-point mark for the first time. 1999. The index reaches 10,000 points for the first time. 2008. The index falls during the financial crisis, but subsequently recovers. 2020. The index experiences major fluctuations due to the COVID-19 pandemic, but recovers again and reaches new all-time highs. Long-term returns. The Dow Jones historical return has been around 7 to 10% per year when dividend reinvestment is taken into account. This return includes both ups and downs, indicating its long-term stability and ability to recover from crises. The largest companies in the index. Among the 30 companies in the index are some of the largest and most well-known companies in the world. Here are the 7 largest. Apple Incorporated, a technology giant known for its innovative products such as the iPhone and MacBook. Boeing Co., a leading manufacturer of aircraft and defense systems. Coca-Cola Co., an iconic beverage brand known worldwide. Johnson & Johnson, a company focused on healthcare, pharmaceuticals, and consumer goods. Visa Incorporated, a global leader in payment technology and electronic transactions. The FTSE 100, which stands for Financial Times Stock Exchange 100 Index, is a stock market index that includes the 100 largest companies listed on the London Stock Exchange. The index was first introduced in January 1984 and has since become one of the most important indicators of the performance of the British economy. History and long-term performance. The FTSE 100 has a long history, during which it has gone through various economic cycles, including periods of growth, recession, and crisis. On average, the long-term performance of the FTSE 100 is around 7 to 8% per annum, which includes both capital gains and dividends. It is important to note that the performance can vary depending on the specific time period, and in some years it can be significantly higher or lower. The largest companies in the FTSE 100. The largest companies in the FTSE 100 index include Unilever, a multinational company engaged in the production of consumer goods, including food, drinks, cleaning products, and cosmetics. Shell, one of the largest oil and gas companies in the world, engaged in the extraction, refining, and distribution of energy. HSBC Holdings, an international banking and financial services company, providing a wide range of banking products and services. AstraZeneca, a pharmaceutical company specializing in the research and development of drugs, especially in the field of oncology and cardiovascular diseases. BP, British Petroleum, another major oil and gas company, which also focuses on renewable energy sources. GlaxoSmithKline, GSK, a pharmaceutical and biotechnology company, which focuses on the development of drugs and vaccines. These companies make up a significant part of the total market capitalization of the FTSE 100 and have a major impact on its performance. The FTSE 100 index is therefore an important indicator not only for investors, but also for economic analysis and forecasts. DAX, which stands for Deutscher Aktienindex, is the main stock index of Germany, comprising the 40 largest and most liquid companies traded on the Frankfurt Stock Exchange. The history of the DAX begins on July 1, 1988, when the index was first introduced with a value of 1,000 points. Since then, it has undergone many changes and developments, reflecting economic cycles, crises, and growth phases. History of the DAX. 1988. The DAX was introduced as an index of the 30 largest German companies. 1990s. During the 1990s, the DAX experienced significant growth, especially during the tech bubble. 2000. After the tech bubble burst, the DAX fell, reflecting the overall recession in the markets. 2008. The financial crisis led to a further decline in the index, but after the crisis, the DAX started to rise again. 2010s. The DAX stabilized and reached new historical highs, mainly due to the strong performance of the German economy. 2020. The COVID-19 pandemic caused a short-term decline, but the DAX quickly recovered and reached new record highs. Long-term return. The long-term return of the DAX is around 7 to 9% per year, depending on the period you are looking at. This return includes both capital gains and dividends. The DAX is considered one of the best-performing stock indices in Europe. Largest companies in the DAX. The largest companies that are part of the DAX include SAP Southeast, a German software company known for its enterprise applications. Volkswagen AG, one of the largest car manufacturers in the world. Allianz Southeast, an international insurance and financial services company. VASS Southeast, the largest chemical company in the world. BMW AG, another major car manufacturer known for its luxury cars. Nasdaq Composite. The Nasdaq Composite is one of the world's most important stock indices, comprising over 3,000 stocks, most of which come from the technology sector. The history of the Nasdaq dates back to 1971, when the index was first launched as the world's first electronic stock exchange. Long-term performance. The long-term performance of the Nasdaq Composite has proven to be very strong over the years, mainly due to the growth of technology companies. Since its inception, the index has posted an average annual return of around 9 to 10%, which is an excellent result compared to other indices such as the S&P 500. During the dot-com bubble in the late 1990s, the index reached extreme values, but subsequently experienced a significant decline. However, in recent years, the Nasdaq has experienced strong growth again, especially during the COVID-19 pandemic, when technology became key to the functioning of society. The largest companies in the Nasdaq Composite. The largest and most well-known companies that make up the Nasdaq Composite include the same companies as those in the S&P 500, but only the 100 largest companies. These companies not only dominate the Nasdaq Composite, but also have a significant impact on the global economy and technological advancement. Bitcoin. Bitcoin, the first and most famous cryptocurrency, was created in 2008 by a person or group of people using the pseudonym Satoshi Nakamoto. Its history is fascinating and full of dramatic events that shaped its development and adoption. History of Bitcoin. 2008. In October, Satoshi Nakamoto published a white paper titled Bitcoin, a peer-to-peer electronic cash system, which described how a decentralized digital currency could work. 2009. In January, the first block of Bitcoin, known as the Genesis block or Block 0, was mined. This block contained a link to an article in the Times, suggesting that Bitcoin was created in response to the financial crisis. 2010. Bitcoin began to gain popularity. The first known transaction for real goods occurred in May 2010, when programmer Laszlo Hanyecz paid 10,000 BTC for 2 pizzas. The first exchanges that allowed Bitcoin trading were also created that year. 2011. Bitcoin began to attract media and investor attention. This year saw the emergence of other cryptocurrencies, such as Litecoin, which sought to improve upon some aspects of Bitcoin. 2013. Bitcoin reached $1,000 for the first time. This year was also marked by increased interest in cryptocurrencies and the emergence of many new projects. 2017. Bitcoin experienced a huge boom, with its price rising to almost $20,000 in December. This surge caught the attention of the general public and led to massive interest in cryptocurrencies 2018. The peak in 2017 was followed by a significant decline, with the price of Bitcoin falling to around $3,000. This decline was referred to as the crypto winter. 2020 to 2021. Bitcoin has once again come into the spotlight, especially during the COVID-19 pandemic. In 2021, it reached a new all-time high of over $60,000, partly due to institutional investment and growing adoption of cryptocurrencies. Long-term performance. Bitcoin's long-term performance is astounding. From its inception in 2009, when Bitcoin was virtually worthless, to its current value, its price has increased by millions of %. For example, if you invested $1,000 in Bitcoin in 2010, your investment could be worth several $1,000,000 today. Average annual return. Due to high volatility and dramatic price swings, Bitcoin's average annual return is around 200 to 300% over the long term. Although it is important to note that these numbers can vary significantly depending on the specific time frame. Bitcoin has become not only an investment asset, but also a symbol of decentralization and an alternative financial system. Its history is still being written, and the future of cryptocurrencies remains uncertain but fascinating. From these 6 investments, choose 3 to 4 to which you will regularly send money in a certain proportion. And in 10 years, you will thank yourself that you finally decided to invest properly.